I don't think we've seen a recession, Preston, or at least people don't realize that we're in a recession. So, and the argument from the Fed is like, oh, this is the soft landing that we were talking about. So do you still expect one in 2023 or 2024?
So I think people need to come to grips with what they're seeing in equity markets in particular and Bitcoin uh, might be drastically different than what the regular economy is doing. So you might have like ridiculous unemployment numbers, and you might have the stock market raging. And I think that that's something that none of us in our lifetimes have ever experienced or seen. And what you're getting, I did a different interview with somebody, and I was talking about it from just like a mechanical engineering maybe standpoint, like resonant frequency. So resonant frequency is when you're supplying an input, and the thing that's coming at you is basically 180 degrees out of phase of what you're trying to do. And so I think that you're starting to get to a point where central banking policy and inputs of more fiat is actually at resonant frequency with the rest of the economy. Right now is a perfect example where I was saying that the equity market on the Nasdaq and the S&P 500, Hodl said it's closer to the high than it is the low, and you're at a point where the market would typically be getting ready to go through a big sell-off, and then maybe central banking policy. But they're going to be supplying so much capital, so much. Let me rephrase that. So much digital monetary fiat units into the system that I think it's going to blow people's mind, because it's trying to offset just massive amounts of credit impairment that is occurring because you have this upside down yield curve against inflation. And so as they continue to supply this, they're supplying more of the same policies that got us here, that broke supply chains, that is causing prices to rip. And so it goes to this, like, where are you going to put your money to preserve it? You have to own something that's scarce, and you have to own something that generates free cash flows that's not going to debase the number of shares that represent that equity. Those are the only two places you can go to preserve your buying power. One, especially when you're talking about Bitcoin that has a really small market cap that has the potential to mature into this really substantial market cap, is where you're going to see the biggest bang for your buck, versus, like Apple stock or something that's going to probably remain profitable, that's not going to debase the number of scarce shares that exist, that's going to do really well in the face of fiat that most people are used to measuring it against. So I know I was a little bit all over the place with the response, but you got to expect market conditions that are very different than what you've seen in the last 40 years. They're going to be out of sync with each other. You're getting this resonant frequency that's just causing disruption in supply chains that are barely profitable, which only continues the unwind and the difficult situation with respect to inflation.
There's this scene in the Simpsons movie when they put a giant dome over the town, and he goes, "Are you telling us we're trapped like rats?" And he goes, "No, rats can't be trapped this easily. You're trapped like carrots." That's what they've done to the market. There is nowhere to escape to. And you know what I mean? For those of us who are in Bitcoin, like, we already have our plan is in place. We're already good. We're in cold storage. Like, everything's fine. But like, imagine if you had to get out immediately into Bitcoin in size, and all of the on-ramps and off-ramps were all wonky and cut off. How are you going to do it? You really can't, right?
Yeah.
And so I think another thing too is, like, we always talk about Bitcoin being so volatile, right? And that, there was this Michael Saylor idea he was promoting like 2 years ago, that the volatility would go down over time and we would collar this asset as the big money came in. That turned out not to be the case. I think the reason it wasn't the case is because the traditional system is growing more volatile by the day. Like Preston was talking about, all of these inputs and outputs are all over the map. And, moment to moment in the market, the emotions are so strong that it either feels like we're going into the Great Depression and we're all going to be fucked and we're going to lose all our money, or, oh my God, we're all so rich. This is like .com 2.0. This is amazing, right? And the market has become extremely bipolar, and it oscillates wildly between these two phenomena, right? And so I think what's going to happen ultimately is what Preston said, which is that the vast majority of Americans, people who without assets, people who, work a 9 to 5, live paycheck to paycheck, don't have a lot of savings, they're going to be really hurt by the policies that come later, because in order to prop the whole system afloat, you're going to have to flood the zone with cash, right? It's like that Steve Bannon saying, flood the zone with shit. You're going to have to flood the zone with cash. Like, you just have to. And you have to keep flooding it and flooding it and flooding it. And basically, like, every time you print, you're going to have to print twice as much as the time before. And it's going to be half as much time between printing cycles. So you're going to print twice as much, half the time. And that's an exponential. That's what Jeff Booth talks about. Like, and we're just going to a place where, here's another thing. Like, Balaji has this bet about hyperinflation coming to America in 90 days, right? People have been talking about hyperinflation. I was in a room of some of the dumbest people on Clubhouse the other day, and they were talking about hyperinflation and the dollar's collapse against the BRICS nations, et cetera. Now, I'm not saying that that is happening right now, okay? But I am saying that at some point this system unwinds, and hyperinflation is always demarcated by a loss of confidence in the underlying currency. So when you see people begin to lose confidence in the underlying currency, and they talk about it in mainstream media, it's a canary in the coal mine. It's a tell that something is going on, right?
And back to the point that I was making earlier, Hodl, with the showing like the UK's bond yield curve and the European bond yield curve. Like, we're so interconnected here in the US, our yield curve doesn't look all that bad relative to theirs. They're double-digit inflation. They're dealing with a situation from an energy standpoint that they have no control over. And if you don't think that a market of that size can have a spillover effect here to the US and the rest of the planet, you just don't understand how interconnected things are.
I think something people don't know about is the Eurodollar system, right? And just how many dollars are created in Europe. I think it's actually more than are created in America. So yeah, not only are we interconnected, but it's basically the same system across the board, right?
Yes.
So we should pull up the Opti. It seems like you have them, so we could visualize for anyone who's looking at it what Preston was referring to.
So this is the US's yield curve, and I think you get a lot of US pundits that look at this and say, "Oh, it's, you know, the credit market is basically saying that the recession is coming and that the Fed has finally got what they wanted, right? But with all their tightening, based on looking at this curve." That's what I think most US pundits would say. But where I would push back, and I'm not saying I'm right, I'm just saying where I would push back is I would pull up the next two curves, which is the UK here, right? None of that is under control at all. And then the European bond yield curve, which is here, that's not under control. That is a credit market that is aggressively selling off with tons of volatility that seems to be normally, like if you were going to do an average true range of the volatility there, it's completely in keeping with the trend of volatility. And they don't have any of this double-digit inflation under control in Europe, and at a time where OPEC is saying that they're going to, try to. I mean, they didn't say they're going to do this, but their actions are saying that they're trying to keep prices elevated for energy. So, like, whatever it is you think you know based off of the past 40 years in what brings stability to markets, I think you can just, light it on fire and throw it in the trash can, because that's where we're at right now.
There's a lot of boomer investors who are extremely confident, I would say overconfident, about the fact that we're going to run the 70s back. I don't think that's happening
at all.
Personally. Now, maybe I'm a young idiot who doesn't know what he's talking about, but it just doesn't seem like the same history to me.
What is different?
Because here's what's different. So the actions of manipulating the cost of capital for 40 years, and I think it's important that in that first 40 years, it wasn't anything like it's been in the last 10 years. Okay, I will emphasize that. But in the last 10 years, the manipulation of the cost of capital itself, which is manipulating the price of everything, has been so grossly overused, especially with QE. And now basically this backstop is basically yield curve control is what it is. It's yield curve control, whether people want to believe it or not. You are so grossly manipulating the cost of capital that the real impact is that you are destroying supply chains. You are consolidating enterprise. Instead of there being 10 businesses that can provide widget X, there's 5 or there's 3. And then when one of those 3 go bankrupt because their energy inputs are too expensive, now there's 2. What does that do to the price of things if you can only choose from 2 vendors? it makes the prices go up. It's that simple. And so what they're systemically doing is they're poisoning a naturally free and open economy and all the supply chains that supply the pieces and parts that would make prices most optimal. We saw that peak, and now it's undoing itself, and it's like a water wheel. Once it starts spinning the other way, it will keep spinning that way, because that's, you know, the momentum that it has. And so they've conducted these policies. It's actually brought a lot of stability in the form of like prices for everyday consumers. But what they're not seeing is the prices of scarce things like healthcare, like energy costs, like meat, and like these things that that people take for granted are now starting to unravel themselves, and they think they can just step in and do some keystrokes by adjusting the amount of units that are in the system, because it's worked in the past to bring stability. But now they've actually got a systemic, fundamental, physical issue with supply chains, and they've got OPEC plus net producers that are pretty pissed off about how things have gone over particularly the last 10 years. And they're fighting back, and they're saying, no, we're not going to participate in this scam anymore. Is really what their response is by what they're doing with oil prices.
Also, you don't have the same ability to do financial repression that you did 50 years ago, right? Because what we're seeing is an analog traditional system come up against a new digital system. And every time we've seen that, the analog system has been completely dematerialized by the digital system. So if you want to say, hey, we're going to cut the ACH on-ramps and off-ramps, well, I can guarantee you that the digital system is going to find a quicker, more efficient way around that almost immediately, right? You want to cut SWIFT, you want to cut FedNow, the digital system is going to find a way around that, and it's going to be able to dematerialize you. So you can't fight too hard against the exits, because if you do, there's a Streisand effect to it too, where you suddenly you say the Fed says ban Bitcoin, or the U.S. government says ban Bitcoin, and suddenly people go, wait, why do they want to ban Bitcoin? Right? It's like yelling fire in a crowded theater. It'd be the worst thing they could possibly ever do.